China's $850 billion weapon pointed at your mortgage, $850 billion. That's not just a number on a spreadsheet. That's a loaded weapon pointed directly at your bank account. And as of this morning, the finger on the trigger belongs to China. What I'm about to show you will explain why your mortgage rate is about to detach from reality. Part 1. The hidden weapon. For years, people said a total collapse of the bond market was impossible. Just a conspiracy theory. But right now, we're watching it move from impossible to inevitable. This is a geopolitical divorce between the world's two biggest superpowers, and it's going to force a price reset on everything you own. Most analysts only look at one number: Chinese holdings of standard U.S. Treasuries sitting around $760 billion. But that's not the whole story. When you add in U.S. agency debt, massive entities like Fannie Mae and Freddie Mac, the real number is $850 billion. That's the leverage Beijing holds over the American economy. For 2 decades, we had a deal. China sent us cheap goods: electronics, clothes, furniture. We paid them in U.S. dollars. Then they did something very specific. They recycled those dollars right back into our debt market. They loaned the money back to us. This kept our interest rates artificially low. It kept their currency cheap so they could export more. It was the greatest financial trade in history for the American shopper. It subsidized our entire standard of living. But that trade is over. The 2026 trade war broke the cycle. When the U.S. put 60% tariffs on Chinese goods, we told them their dollars were no longer welcome here. China did the logical thing. They stopped recycling those dollars into U.S. debt. Instead, they started selling. The latest data confirms it. China is dumping U.S. assets at the fastest pace since 2015. This isn't random. This is strategic warfare, using your mortgage as collateral damage. Part 2. The bond market mechanics. Here's what most people don't understand about how this destroys your buying power. The U.S. government runs on debt. We have a $2 trillion annual deficit. That means the government spends $2 trillion more than it collects in taxes every single year. To keep the lights on, we have to sell billions in new bonds every single week. It's like paying off a credit card by opening a new credit card forever. In the past, China would show up to the auction and buy a huge chunk. They were the guaranteed buyer. Now, not only are they gone, they're dumping their old bonds onto the market. This creates a supply shock. Imagine a neighborhood where every single house goes up for sale on the same day, but there are 0 buyers. What happens to prices? They crash. The bond market works the same way. More bonds for sale than people who want to buy them. When supply exceeds demand, the price of bonds collapses. And here's the rule you need to memorize. In the bond market, price and yield are a seesaw. When the price of the bond goes down, the interest rate goes up immediately. This is why you're seeing rates spike even though inflation is technically cooling. The market knows the truth. There's no marginal buyer left. The marginal buyer problem. The Federal Reserve is doing quantitative tightening, selling, not buying. American banks are already full of government debt with massive unrealized losses. Japan is selling to save its own currency. China is dumping $850 billion. That leaves you, the American investor, as the only one left to fund the government spending spree. To convince you to buy a 10-year bond, the government has to bribe you with a much higher interest rate. This creates a crowding out effect. It forces yields higher across the entire economy. Every loan, every credit card, every car note. But the most direct impact? Your house. The 30-year fixed mortgage tracks the 10-year Treasury yield. If China's selling pushes that yield to 6%, mortgage rates mathematically have to hit 8 to 9%. That's not a prediction. That's math. And it's inescapable. Part 3. The Fed has been neutered. Here's what's terrifying. We're seeing a complete decoupling. The mortgage rate is divorcing from the Federal Reserve. Think about what that means. We're taught that the Fed sits in a control room and steers the economy. That's a lie. The Fed only controls short-term rates. The market controls long-term rates. The Fed could hold a press conference tomorrow and cut rates to 0. But if China dumps $50 billion in bonds that same afternoon, your mortgage rate will go up, not down. This neutralizes the Federal Reserve. It breaks their ability to save the housing market. This is fiscal dominance. Economists call it fiscal dominance. In plain English, the size of the debt pile matters more than interest rate policy. And make no mistake, this is war. But it's not fought with missiles. It's fought with math. The strategic timing. China knows exactly where we're weak. They know the American middle class is addicted to housing wealth. They know real estate is the engine of our economy. By forcing our interest rates to stay high, they can engineer a depression in the United States without firing a single shot. The timing is not an accident. It lines up perfectly with semiconductor sanctions. We told them they couldn't have our best computer chips. We cut off their access to NVIDIA technology, so they retaliated. You cut off our chips. We cut off your credit card. The difference is brutal. China can survive without high-end graphics for a few years. The US economy cannot survive 9% mortgage rates for even a few months. The gold signal. And here's proof they're serious. China has been buying gold for 28 consecutive months. That's a record. They're trading paper promises from a hostile government for hard assets with zero counterparty risk. They watched what the US did to Russia's money in 2022 freezing accounts overnight. China is ensuring that cannot happen to them. Part 4. The banking system time bomb. Now let me show you the hidden crisis that makes this even more dangerous. There used to be a safety net called the reverse repo facility. It was a giant pool of cash, over $2 trillion, that absorbed shocks in the system. Think of it like an emergency water tank. When the government needed to borrow money, it could dip into this tank. It kept interest rates stable. It was a cushion. But as of this month, that cushion is gone. The tank is empty. That $2 trillion has been spent. Now every single dollar the government borrows has to come directly out of the banking system. The perfect storm. This is the worst possible timing. We're hitting a liquidity cliff at the exact moment China is dumping $850 billion in bonds. Without that buffer, banks are scrambling for cash. And here's the terrifying part. According to the FDIC, American banks are sitting on over $600 billion in unrealized losses. Here's how it works. Banks take your deposits and buy safe bonds. But when interest rates go up, the value of those old bonds goes down. It's simple math. The banks rely on a loophole. As long as they don't sell the bonds, they don't have to admit they lost the money. They can hide the losses. But there's a catch. If you get scared and go to the ATM to pull your money out, the bank has to pay you. To get the cash, they're forced to sell those bonds. And since the bonds are worth 40% less, they lock in the loss. They go bust. Silicon Valley Bank 2.0. This is exactly what happened to Silicon Valley Bank in 2023. But now the risk is everywhere, and China knows it. By selling their bonds and forcing rates higher, they're making the hole in every bank's balance sheet bigger. It's a deliberate attack on the American banking system. Part 5. The petrodollar is dying. But the attack isn't just in the bond market. It's happening in the energy market too. For 50 years, we had a deal with the world called the petrodollar. If you wanted to buy oil anywhere in the world, you had to use US dollars. If France wanted oil from Saudi Arabia, France had to buy US dollars first. This created permanent demand for our currency. It forced the world to hold dollars. That era is ending. China is the world's biggest oil customer, and now they're paying for oil in yuan. They're using swap lines with Saudi Arabia. They're bypassing the US financial system entirely. This reduces global demand for dollars, right when we need people to buy them most. The Pincer Movement. This is military strategy, a pincer movement. Attack from two sides simultaneously. China is attacking from the supply side by dumping bonds, and they're attacking from the demand side by reducing dollar usage for oil. They're squeezing the US dollar to death from both ends. The exorbitant privilege dies. For 50 years, America had what economists call exorbitant privilege. We could run massive deficits without paying the bill because everyone needed our money to buy oil. That magic credit card just got declined. If the world needs fewer dollars to buy oil, they have zero reason to hold US Treasury bonds. The impact is already hitting. Investors are demanding much higher payments to hold US debt because they realize the government has no plan. Actually, they do have a plan, but it's a bad one. Borrow new money to pay the interest on old money. In the criminal world, we call that a Ponzi scheme. In Washington, they call it fiscal policy. Part 6. What this means for you. So what does this actually mean for your life? Your mortgage. If you thought 7% interest rates were painful, you're not ready for what's coming. When China's $850 billion sell order pushes the 10-year Treasury to 6%, mortgage rates hit 8 to 9%. That's not the Fed's decision. That's the market's reality. Your home value. At 9% mortgage rates, housing doesn't just slow down. It freezes. Transactions collapse. Buyers disappear. Prices fall. The wealth effect reverses. You stop spending. Businesses cut back. The economy enters a doom loop. Your property taxes. Even if you own your home free and clear, you have a problem. Local governments are broke. Commercial real estate has destroyed their tax revenue. Empty office towers don't pay taxes, so they're coming for you. Property taxes will rise aggressively to fill budget holes. Your home turns from an asset into a tax farm. Your bank account. The US Treasury faces two choices, both terrible. Door number 1. Force the Fed to print trillions to buy the bonds China is selling. Result. Inflation explodes. Your grocery bill doubles. Door number 2. Do nothing. Result. Deflationary depression that makes 2008 look like a picnic. Heads they win, tails you lose. The everything impact. This isn't just about bonds or housing. It's about everything priced in dollars. For 40 years, cheap Chinese labor kept your cost of living low. That era is over. The China price is dead. It's been replaced by the war price. Companies are panic-moving factories from China to Vietnam and Mexico. Politicians call it friendshoring, but it's expensive. And you pay the bill. You're paying a geopolitical tax every single month. Whether you realize it or not, your standard of living was built on cheap foreign money. That money is gone. Conclusion. The Great Wealth Transfer. We are watching 40 years of globalization unravel. The bond vigilantes have returned, but this time they're not investors worried about inflation. They're state actors selling to inflict pain. The $850 billion sell order is not a threat for the future. It's happening right now. The dollar is being strangled by the very nations that helped build it. The smart money is moving. The billionaires, the family offices, the people who see what's coming, they're running. They see the bond market cracking. They're moving into assets that cannot be printed. Gold, central banks buying at fastest pace in 50 years. Land, commodities, real productive assets. The 60/40ths portfolio is dead. For 40 years, financial advisors said put 60% in stocks, 40% in bonds. That strategy is buried. Why? Because bonds used to be your shield. Now bonds are the sword. They're the source of risk. They're the epicenter of the earthquake. Your choice. The Great Wealth Transfer is not a conspiracy theory. It's mechanics. When a government can't pay its bills with taxes, it pays them with inflation. Wealth doesn't get destroyed. It gets transferred. From the unprepared to the prepared. From paper holders to asset owners. China has made its bet. They're betting against the dollar. They're betting on mathematics. The question is, are you on the right side of that bet? The storm isn't coming. It's here. Build your ark while you still can.